Africa's trade finance crisis is increasingly becoming a banking retreat story. The African Development Bank estimates the continent's trade finance gap averaged $74 billion between 2021 and 2024, while banks now intermediate far less African trade than they did before the pandemic. The problem is no longer just missing infrastructure or trade corridors. It is shrinking bank balance sheets, rising compliance costs, foreign exchange pressure, and weaker appetite for African trade risk. Small and medium-sized businesses are being hit hardest. Many cannot secure letter of credit, inventory financing, or settlement guarantees needed to move goods across borders. At the same time, Africa still owed roughly $4 trillion in domestic institutional assets across pension, insurer, sovereign funds, and banking system. But much of that capital remains trapped in defensive allocation structures instead of supporting trade finance and industrial growth. Initiatives like the African Continental Free Trade Area and the Pan-African Payments and Settlement System can improve regional trade and payment system. But trade agreements alone cannot move cargo if liquidity and bank confidence remains weak. The deeper issue is no longer whether Africa has capital, it is whether African financial systems are willing to deploy it into trade at scale.